Welcome back, everyone. This is our Gold Weekly Review. My name is Angelo Zitis, and this week's title is Are We In for a Liftoff? Gold prices moved higher since yesterday after market sentiment observed some updates on some plans the US president may have for the future. In general, gold traders have a busy week ahead, and some financial data, along with fundamental updates, can provide the opportunities or signals for possible gain. Now, we make a start with the US dollar, which dropped significantly in the previous days. The greenback was under pressure in the latest sessions, moving lower since last week. Greenback traders are significantly related to gold prices, as the two instruments could be used as a hedge for each other most of the times. The greenback showed signs of weakness since last Thursday's Thanksgiving holiday taking place in the US. The absence of greenback followers continued on Friday, sending the currency even lower, while on Monday a strong sell-off was performed. Weaker than expected US ISM manufacturing PMI data yesterday may have provided enough reason for the strong sell-off to follow up, making it easier for gold to gain back some ground it had lost during Monday. On a brief note, in our view, there is a point to make on the financial releases from the US. Some readings from the US last week, like for example durable goods, the GDP second estimate, and even consumption, came out particularly strong for the US economy. Gold traders were not impressed by these readings, however, and were reluctant to sell out their positions. This indicates that even though financial releases from the US are important for gold's direction, there are other subjects currently which act as a stronger driver than the releases as such. Yesterday, US President Donald Trump announced new tariffs on Brazil and Argentina on large steel imports by the US. The release of the news didn't really move gold prices, and traders may be more confident to make a move after action is confirmed, even though these comments may even be a premonition of what is to come. Going against these countries is a big move, as the US hasn't even resolved the Phase 1 deal with China yet, and they are talking of opening other fronts. In any case, comments without actions are dead, so volume for gold will increase if action is seen. Furthermore, today, the Trump administration stated they were considering tariffs on up to $2.4 billion of French goods in retaliation to the country's digital tax against US tech companies. All this could be creating the idea that there is no end to this tariff war. If risk increases and the US follows up on new tariffs on all the pre-mentioned countries, then gold prices could be picking up volatility. On the US Sino front, not many updates have been released. It must be said, though, that many believe that the Phase 1 deal is currently being inked and could be signed before Christmas. However, as long as the deal is not signed, then the market will continue to perceive it as a major unresolved matter. China could be under immense pressure and may be willing to sign a deal as soon as possible, while the US will consider all the details, and if the deal is fit, they will follow up according to the US president. In any case, if the two sides do sign a deal in the remaining of 2019, it could seem that things are in place for a more comprehensive deal. Moving now to our conclusion. Now, gold is nearby 14% up so far this year, primarily due to the trade war, but has been trading in a range of 1444 and 1478 since November. Yet, December could be quite eventful for the precious metal, as it could prove a decisive period for the further direction of gold. Also note, the upcoming US employment report on Friday could be a source of major volatility for gold due to its unpredictability. Moving now to our technical analysis, this is gold's 4-hour chart. Now today, gold approached and surpassed the 1470 round price, of which gold traded above for the last time on the 22nd of November. If traders favor a buying momentum, we could see gold heading higher for the 1479 R1 level last seen on the 20th of November. If the bulls push even higher, then the next possible stop could be at the 1492 R2, with the ultimate goal of reaching the R3 1504 line. In the opposite direction, if gold is to move downwards, the first level could be the 1460 S1 level that was tested in the previous sessions today. Even lower, the metal could move to the 1450 S2 support level, last seen on the 26th of November last week. If the selling momentum persists, then the next possible levels lower could be the S3 1444, last seen in the beginning of November, and even lower, the S4 1430 level is also possible. Now, the RSI indicator below our chart confirms the bullish momentum today, as the indicator points at the 70 level, with still room to move higher. If there's anything in this report that you found useful, make sure you apply it to your trading. That's the whole point. Thank you very much for your time. We will see you next week.